Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn & Associates with your metals market update. And this is your weekend edition, so it's a little different. It's for Friday, the 25th of January, 2019, and we're just after 4:10 p.m. Central Standard Time. So what I do on the weekend edition is I first talk a little bit about what went on during the day, what we're seeing. Then I'm going to take you into a monthly chart, and then they're all going to be weekly charts. During the week, we cover daily charts. At the end of the video, I want to remind everybody, I've brought out a new service. If you like these videos, you're going to love my morning subscriber video, where unlike this, I can say buy here, sell there, do this. Here's a day trade. Here's a position trade. I really give you a lot, and I cover 40 markets. So, you know what happened today, being Friday. The president basically gave in, and he reopened the government. Now we're just waiting for the Senate and the House to pass the bills for 3 weeks. At the end of 3 weeks, if you can't get the negotiations on the border wall, whatever that means, security, I'm not sure what it means anymore, then he's prepared to go the nuclear option, he said, and declare an emergency action. I don't know if that means the government would shut down 3 weeks from now, or if he'd just say, no, I'm declaring this action, moving on. He'll let us gamble on that. The next thing that's happening is China. The Chinese delegates are in America. They start meeting next week, and we'll find out if any real headway is being made. That's important. In the meantime, yesterday, we saw the euro currency come down hard off of statements that easing in Europe, not the way that the ECB was looking for things. Today, back up 100 points as the dollar crashes. And that's because the government reopened. If you knew that, great. I didn't know that. And that's what the market seems to be attributing. Okay. When we look at gold, here's the important thing. You're back over the 18-month moving average of closes. Now, I think you'd agree this market is doing something here. It's either building a huge base from which it can move out and really get something going to the upside, or this is a bounce in a market that's otherwise still bearish. You've got divergence throughout this chart, but I'd expect that on a monthly. You've got lower highs, lower lows. You got your first bounce last week into the resistance of the monthly area. And so far for the month, we're up $16. And momentum is up. So I got the swing line down, but I have bias up because I'm over that 18-month average, and momentum is up. When we come to the weekly area chart of closes, pretty impressive looking. The market has now gained about $122 or so since August. It's a nice gain, over 10%. When we look at the Fibonacci study, I removed it. You're going to say, what did Ira do to me? Well, this was the high and low. You're now over the 62% area. Remember, we were back here and I said, what's it going to do? And I think that Fibonacci count is now out the door. I'm more inclined to be looking on a weekly chart at this week's low. If it's taken out next week or the week after, I think it does a lot of damage to the chart. Don't do it, and do it anytime after that. It'd just be a correction. What else do we look at? We look at what the swing line's doing. It's got higher lows and higher highs. That's bullish on the chart. Again, the swing line low becomes this week's low because it's a outside week up. Now, if the market did not take out the highs of this week next week, and you went through these lows, I'd have to back this arrow all the way over here. But right now it stays where it is. In terms of where support, if you pull back, well, the 100-week average is certainly one of the numbers, 1269.50, and then you've got the 18-week and the 200 way down to the 1236. The most important thing I can say is the market has built a case that this low is a very important low that may not be seen for quite a while, at least is my opinion as a chartist, in the 1150 area. In terms of resistance, you're right there. Bollinger Bands are what? It's an algorithm designed to keep the market trading within it 95% of the time. Yes, it can get over it. It did there. but it will trade within the band 95%. So traders that buy over it, I wish them the best. Maybe they can get these runs, but traders that sell under it often find themselves in trouble. And if you go back, like over here, if you're buying over that number, you got in trouble. I am not saying the market isn't a buy, and I'm not saying it is a sale. I am saying there's a better way to trade than buying over a Bollinger Band. That's what I am saying, and the market's at a resistance point at that 1305 area. In terms of momentum, it is up. On the weekly chart, I don't look for overbought, oversold. Which way is momentum pointing? Both numbers are staying over 80. That's bullish. So I have a market in an uptrend with upside bias, momentum up. What I don't want to see is the lows of this week taken out. The market wants to ride that upper Bollinger Band higher. Got to be with it. The gold-silver ratio suddenly making a turn this week, and it's favoring the silver slightly. Now, I was questioning, was it going to get back to the 18-week average here, and it hasn't. Now, to make silver really appealing, you want to get it under that last break low of 81.45. You need less silver to buy an ounce of gold. In the GLD, this has stayed with bullish momentum. It's got not the trend that you do on the futures. You have here a lower low and a higher high. But that's all you can say about it. Where's the resistance? 124.33. Where's the support? The 100-day average. Still friendly. GDX, different formation. Higher lows, certainly higher highs, momentum up, bias up. So other than the GLD chart, basically, gold's looking pretty good, including the minor sector. In the silver market, higher lows, higher highs. Never did break back to that 18-week average. Momentum is up, like in the gold market. I don't want to see this week's low taken out. If it is, it'd be a candidate to make a run potentially back to the 18-week average, wherever that comes in. And that 18-week average, by the way, is jumping on maybe 6 cents a week or so under the current rate. So if it is, we're probably going to see that closer to the 14 high 80s. We'll see what that does. In the copper market, I was almost laughing today. This was the only market I had a feel for that it was going to bounce. And you'll say why. Because I don't envision the Chinese delegates and their head negotiator coming to town and the market's going to say in copper going into that, gee, I want to be bearish. So all that I'm seeing here is a market that's staying within the confines of the 18-week average and the Bollinger Bands, be it the high and the low one. It tried to stick its head out, couldn't do it. It's just sort of stuck here. Remember, they do call this the barometer of economic activity around the world, and about 45% of the world's copper is used by China. China wants a trade deal. They've offered things already, but it's the intellectual property where they're miles apart, and that's got to be resolved. I don't think the trade numbers themselves are the big hurdle. In the platinum market, we're still in a pattern of lower highs and lower lows. However, the market looks a bit spent to the downside. If it rallies here, the 18-week average would be the resistance, what I'd expect. If you can close over this 825.40 zone and not take out this low again, you could have higher lows, higher highs over that number. It would probably turn momentum up and get you friendly. But the first things first, you've got resistance at that 18-week average, and we'll see what happens. This chart could end up with a pattern of lower highs, higher lows as well, which puts you into a funny type of trade. In the palladium market, on the daily charts, please take a look. You hit the 18-day average. That was all that this chart, when you lose an embedded reading, calls for. I don't deal with embedded readings on weeklies. So, knowing that, I'm looking at a market that still has a pattern of higher lows, higher highs. Momentum is still pointing to the upside. On the weekly chart, everything is still friendly. And by the way, from that 18-day average that it hit today, I was laughing when I was looking at it. I think it rallied $50 an ounce. In the dollar index, this chart was a failure. You've got lower highs, lower lows. The market closed under the 18-week average of closes. Momentum's pointing down. A potential support target could be the combination of the lower Bollinger Band and the 100-week moving average of closes. So you put it together, you got an interesting time. And let me give you something that I do. You know, I've done this now 50 years. I know it's hard to believe, but I began in the futures in 1969, so there's a reason I have this. Seen just about everything, but let me tell you how you learn. How I learned might be the way to start it off. You don't just sit down and you learn the commodity trade business or the stock trade business or the ETF business. You start reading, watching what others are doing. I am a chartist. It's that simple. I believe that everything known on the fundamentals are known on the chart. Why I step back and I teach you to step back on major report days, that could be a change of the fundamentals. The market has one view going in, everything can change. You know the algorithm traders take off at that time. But I cover this range. When I teach in my charting course, you know that one of the things I'd like you to do is take off the name of the chart. I don't even want you to see the scale. I want you to pay attention to chart action. Well, I cover all these different and know the names will be on them so you can keep up with it. But let's assume you just wanted the energies and you don't want to know all that. You just grab the bottom of this video, drag it, you'll get to where you want. If you want just the front ones, you do it. You can jump wherever you want. I make one video and I record it at 8:30 a.m. Monday through Friday. In that video, I'm going to tell you what I see in the chart action, what I think the pros are doing, technicals and fundamentals, and I make you a promise. Unlike these videos that we know our viewership keeps growing, I can offer specific buy here, sell there ideas, and I do it in that video. And the reason is it's not available to the public. Yes, it's a pay. $7.95 for 30 days. 38 cents a day, something like that. After that, if you want to go month to month, it's $15, and we're going to have a one-year subscription as well that'll be in between that price. I'll have that out in a week or so for you. How do you get it? Well, you can always call my staff. They'll take care of it. If we're not here on the weekend, leave your name and number. We'll call you back. Or best yet, just go to our website. Under the words research or education, you're going to drop down. You'll see a menu drop down. Go to morning subscriber video. Click on it. It tells you all about it. At the bottom, you just put in your information. I'll get you signed up. 1, 2, 3. I'm Ira Epstein. You have a great weekend. Hope you take advantage of this. Talk to you Monday.